Okay, and the final speaker on our panel, Mr. Christophe Nijdam.
Thank you. May I suggest that maybe I could use 2 minutes of the time that was not used before? Besides what was already said, especially by the two real people testimonial here, I would add one thing. The irony is that about 20 years ago, when I used to be a banker, some Belgian institutions, duly represented here today, were more than keen to open a bank account for you in Luxembourg. And we used to have what we called, when I was an investment banker, the Belgian dentist. And the Belgian dentist had a bank account in Luxembourg and was taking the train every weekend to clip his coupons in Luxembourg on the Eurobond market. It's an anecdotal thing, but it's interesting to see that 20 years later, in that respect, it's becoming much more difficult to have cross-border sales. Of course, 20 years ago, the main reasons for having a bank account in Luxembourg is something that nowadays is no longer very fashionable. Ladies and gentlemen, thank you for having invited Finance Watch to speak on this panel today. If the Commission's initiative is successful, it will lead to more cross-border sales of financial services. It will lead to more distance selling and to more digital delivery. This does raise some public interest questions, and I will try to address 3 of them today. The first one is, why is there not more cross-border selling already? Distance selling makes it harder for buyers and sellers to interact. Without a personal relationships, trust can only be built on brand and reputation. Unfortunately, this takes time to build, and trust in the sector, as you know, is extremely low since the beginning of the crisis, and maybe because of the crisis. And trust in the sector, as you know, is extremely low since the beginning of the crisis, and maybe because of the crisis. This may explain, beside all the other points that were mentioned, like regulations, this may explain why cross-border sales are so much lower in the financial service area nowadays than in other sectors. The best policies will be the ones that improve trust in the long term and not undermine it. The second question that I would like to address is, what channels could facilitate consumers' access to financial products in other member states? Online distribution should reduce cost and allow for more automated personalization of financial products. But these definite benefits also comes with a few strings attached. Digital delivery can dramatically increase the risk of mis-selling. How many of us read the fine print when we shop online? Probably very few, including myself. When the product is the small print, which is the case in insurance, then it becomes a regulatory problem. An over-reliance on remote scoring and mechanical risk assessment tools means that cross-border products are less flexible and can lead to large losses if the scoring techniques are wrong. Digital delivery can also lead to some citizens being financially excluded if offline channels such as telephone services are not also offered. Cross-border selling invites providers to shop around for the lightest tax regime, which calls for more tax harmonization. a key issue for many, many domains in the EU, and not just retail financial services, but also, for instance, CMU. Finally, it is harder for customers to get redress across borders if something goes wrong. The Commission has identified this as a problem, and we hope that the Commission will seek to make providers equally accountable abroad as at home. The last question that I would like to discuss is what can be done to enhance competition. The theory is that more cross-border competition will lead to more innovation and easier price comparisons. We must ensure, however, that it does not also lead to consolidation and increased concentration as it did in other sectors. Nor should it be allowed to increase the too big to fail problem or reduce the diversity of business models in financial institutions. If one accepts those limitations, the Commission could promote competition in a number of ways. It should encourage simplification and standardization, not just of regulations, but for all basic retail financial services, which would make products more comparable and more suitable for citizens. It could also harmonize regulation and supervision to reduce the ability, so it's a different approach than the one that you had, of dominant players to prey on the weak, for instance, through payday lending. It could also help end users to identify safe and simple products by extending the use of comprehension alerts and key information documents, KIDs, to all retail financial products. And when the transactions involve a currency exchange, it could help customers to have a choice of rates and fees at the point of sale instead of only those offered by the merchants or the bank involved. Regulation could simplify the requirements for identity and address verification for citizens using financial service abroad so that residence is not, as it is today, a barrier. But competition also has a dark side. Extreme price competition can lead to poorer basic services characterized by bad advice, service disruption, opacity, unsustainable business models, and predatory practices. If the price competition cuts too much into margins, it could push producers towards more complex and profitable products that can exploit end users. It is therefore essential that providers compete on quality as well as price. There is no consumer benefit whatsoever from a cheap insurance policy that does not pay out when you need it. And there is also the problem of market dominance. We have seen market opening leading to extreme concentration, job destructions, in other retail sectors with dominant players. The EU so-called global systematically important banks enjoy unfair implicit funding subsidies that smaller proximity banks do not have. The cross-border markets for loans and insurance is especially vulnerable to winner-takes-all competition. If regulators are clear about these dangers and have the will to tackle them, we do believe they can be addressed through consumer protection that needs to be harmonized, but we need the protection, banking and other areas of regulation. The time is passing by, and I will leave you with the final suggestions which could really benefit end users of retail financial services. Not everyone in the financial industry will like it. Also, they should, and I will try to explain why. End users benefit most from accessing new products if supervisors can prevent detriment before it occurs, not after. So the idea is to reintroduce product rules and supervisory pre-approval for new financial products that would both clean up the retail product offering and pave the way for a financial product labeling system, such as, for instance, the ISO or the EU bio labels in use in other sectors. The cost of product approval should be weighted against higher sales volume and the customer benefit of having simpler, more standardized, and safer products. Introducing some form of EU labeling for approved retail financial products would help to restore trust that we need so much, and would certainly help to achieve the Commission's and the industry's goals of increasing cross-border sales. I really thank you for your attention.